Udayan Mukherjee is with us. Udayan, good morning. The last fortnight has been really good for the broader market. The mid-cap index is up 5.6%, the junior is up 6%, while the Nifty is up about 2%. Your thoughts on whether we've made some kind of price bottom on the broader market, or is this one of those phases like we had last year as well towards the end, which gets sold into?
Morning, Anuj. It's difficult to say because we have events ahead of us. I think, as your previous speaker was saying, this is to do with the perception, and at this point we can only call it perception, that the BJP's political chances have improved with the events of the last fortnight. History will tell us that it may not follow that way, but at this point it seems like the government has more control over the narrative, and therefore it will actually do better than was feared earlier or perceived earlier at the elections, and that is the reason why we have seen this interest come back from the general retail public towards mid-caps and small caps, which have been out of favor. So it depends a lot on how events pan out over the next few weeks leading up to the elections, where we stand then and what facts come to light. So it would be very, very premature at this point to conclude that a firm bottom has been made. But having said that, usually the markets make a move before the elections, one way or the other. I think till now the market was very hesitant because it had no clear inkling on which way to swing. And now it appears that it's feeling more confident. It may be wrong, and we've seen many instances of the market taking a move in one direction and then react very violently after the election results. That possibility always remains. But I think at this point people are more inclined to make a swing towards the way up, and therefore I would say that the probability of a pre-election rally has got brighter. That doesn't mean it will be a permanent outcome for the year, but at least for the next few weeks, the market's looking to move higher to the 11,100, 200 kind of levels again.
Okay. Morning, Udayan. Well, underneath the election rhetoric, of course, is a real economy. We've been getting rather downbeat auto sales numbers. The debt problem is not quite resolved. How does the economy look to you? Do you think that the large amount of fiscal, even monetary stimulus would actually work for the betterment of at least the rural consumer, so it gets balanced out?
Well, Lata, I've been worried about the economy for a while. The question is the slowdown which is upon us right now. Is it just a 2-4 quarter phenomenon? And I've heard a lot of people say it's a cyclical slowdown, but slowdowns usually start as being cyclical and then often they have the nasty habit of becoming structural. So nobody knows how things pan out 3 quarters from now. All we know is that we are sitting in the midst of a slowdown. Now the market may not want to reflect that into the price immediately because it is obsessed and focused on the elections. So from a market point of view, nothing else matters right now. It's basically geopolitics and its bearing on the election result. Now, once it is done with that, it will have to sit down and with calm eyes reflect on whether that 25% earnings growth assessment for FY20 is safe in the light of the fact that we might have maybe close to 6.5% GDP growth in 2019 calendar. So I think it's a sobering assessment, and there are many headwinds. Global growth is slowing down, the farm crisis is worsening, exports are just not picking up, the NBFC mess is clearly hurting us. And all of these issues are leading to this down, which will have an impact on earnings. But that's a story which the market want to grapple with, maybe in the month of June, once the election thing has settled down. But we are in the midst of a slowdown, and that remains an ever-present headwind for a market the moment it starts trading above those 11,000 kind of levels.
Actually, this thought occurred to me when Anuj was asking, I think Nischal, or was it Nick, that the second half should be good because we would have political uncertainty, political certainty. Actually, that was my fear. No matter who comes to power, there is a lot of, scorched earth policy that has been followed now. I mean, maybe that's a strong word. A lot of fiscal looseness, a lot of exuberant lending by banks to MSMEs. Do you think actually the chickens will come home to roost and we should be a little worried about the second half?
Well, the politics matters in terms of sentiment, Lata. I mean, you and I know that it doesn't make such a lot of difference to India's economic or earnings trajectory which government is in dispensation. But try telling the market that right now. I mean, right now we are in election season, and it would appear that economics, policy, fiscal, monetary, nothing else matters but the fact of who is going to be Prime Minister of India. So it is not exactly like that from an economic perspective, and history tells us that that is the case, whichever way we like it. So as I said, in June, the market will have to basically take a cold assessment of what the economic trajectory, and on that actually hinges the performance of the market from there onwards. And by that time, where we are with the global economy as well, because 3-4 months would have passed, we would have a clearer sense of the kind of slowdown that the world is getting entrenched into. So we are in a difficult trajectory, I mean, difficult wicket right now, make no mistake about it. And India will fall in line with the rest of the world once its election season is over. So we are not out of the woods either way, but for the next 3-4 months performance for the market, and I would imagine the next 10-12% of a move is certainly going to belong to which way the political outcome is.
But you did also, Udayan, hi, good morning. You also started the conversation by saying that the probability of a pre-election rally has increased. If one wants to, you know, sort of ride that rally, what are the stocks that one would look at? Because a lot of these large cap stocks have fallen about 10, 15, 20% this year already. What are the pockets to look into now?
The ones which have been rallying for the last 10 days, Sonia. I think if there is a pre-election rally, it will be a sentiment rally. And usually pre-election rallies are not clever rallies. They are gut rallies. They're like, we think this will happen, so let's chase what our favorite things are. And I mean, it's no rocket science to see that the last 1.5 years we've been in a bear market with mid caps and small caps. This might come as a wave of, it's like almost a sigh of relief that, okay, we think we can game this election result. Let's now mark the end or signal the end of this mid-cap bear market. So I would say that don't look at quality, etc., to ride a pre-election rally. But this is about gut and sentiment. And if, I mean, still an if, it's not a given that that will happen. But if a pre-election rally were to happen, I would imagine that more than the Nifty, the real juice might lie in the fallen mid-caps and small caps. The Nifty might rally a bit. I don't see it getting close to a new high or anything like that. Maybe it goes back to 11,200, 300 levels. I mean, from where we are, that's not a whole lot, 3-4% over a couple of months. But I think the real juice might happen in some of those beaten down stocks as sentiment takes over, if it does.
Yeah, that's been happening, of course, for the last fortnight. Pre-open has settled actually much better than what the SGX Nifty indicated. Still things could change, but 10,864 on the Nifty spot is where the pre-open has settled. Let's take the 9-10 calls. Ashwini, what would be your 9-10 call?
I think metal stocks could do well. So JSPL is a buy with a stop of 157, target of 172.
Okay, Sudarshan, your 9-10 call?
Well, the pre-open is very different from SGX, but I would go with the SGX and still be a buyer, whatever the dip is. And Sun Pharma is a buying opportunity. I mean, one of the many, but I'm selecting that for 9-10. Buy with a stop at 438 and a target of 458.
Mitesh, your 9-10 call?
I would choose a buy on Kajaria Ceramics with a stop at 547 for targets of 575.
Okay, so all buys. Udayan, Tata Motors has made a big comeback from 135 to 180. Is this just a case of perhaps, someone saying, okay, let's buy this? I mean, how much worse can it get? Or is the market now perhaps factoring in some kind of kitchen sinking in last quarter and perhaps some move from the Tata stable going forward?
Well, the Tata stable better make a move, you know. There have been some murmurs coming in about how they want to split the group activity Tata Sons into 10 verticals, etc. But I think the time is here now. And the one thing, Anuj, which we have been noticing for the last couple of weeks is that some of these groups are now beginning to figure out how to get out of a very sticky situation. I think there is murmur at this point in time of Tata Motors looking even to sell off JLR. Now, I mean, that may have a lot of ramifications on the stock if the company were to do something like that. I mean, you saw what Bharti is doing right now, taking almost a quarter dilution, 22% dilution to fix their very, very severely impaired balance sheet. I think it's some of these very large groups now taking the call that they cannot linger with the problem, with such a festering problem for too long, and they have to make a call one way or the other to sort of deleverage their business. And I think Tata Motors would be actively looking at it. Bharti is doing it, and you may see more such moves coming in over the next few weeks or so. I think corporate India has realized that getting into a slowdown, 3-4 quarter slowdown, they cannot just afford and watch their businesses getting into a very, very sticky and a sticky spot from which recovery will be very difficult.